Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
We have Ashwani Gujral with us to tell us what he's strategizing in what is quite a consolidatory market for the frontline indices. Ashwani, over to you then. It's the same kind of trend playing out. The index is flat, but specific stocks seem to be making moves. So what would your call be?
See, particularly on the bank Nifty, things are very interesting because we are at that, 26, 100, 200 zone, which is the lower end of the band for the bank Nifty. Now, for the last 4 or 5 sessions, we are always, around these levels, moving down 20 points, moving down 20 points, 30 points. It looks like, bank Nifty is getting exhausted on the downside. And if you see, several large banks are seeing buying at lower levels, ICICI Bank, State Bank, HDFC Bank, etc. Given that techs are having a soft day, I would think that the market could show short covering on banks and financials to hold on to 10,700. So Bank Nifty is a buy right now, and if the market can stay above 10,700, I would think some amount of short covering can happen later on in the day. Asia has recovered, so if Europe also starts to recover, then banks are the most well-positioned instrument which could move higher. As far as individual stocks are concerned, Just Dial is a buy with a stop of 576, target of 600. Lupin is a buy with a stop of 920, target of 945. And Colgate Palmolive is a buy with a stop of 1165, target of 1220. One more thing I want to point out is that even for a person who's looking at a positional call on Bank Nifty, I think his stop is very close by, 26,050 thereabouts. So with a 150 point stop, if this starts to turn, the upside could be 500-600 because, it's not really breaking down, and chances are that a lot of shorts are getting trapped at these lower levels.
Ashwani, stock of the day on the downside is Shriram Transport Finance. But it's not a shady group or company by any yardstick. What has been disclosed in the annual report, of course, is being very strongly disliked. Evidence enough in the stock, the way the stock is selling off. But where do important levels come in?
It's all the market. Last year, the same thing would have been forgotten in 10 minutes. This year, it's such a big deal. But that's how, corporate governance works in this country. So I don't think there is an incremental sell here. I think it will just go towards 900 to about 1,000 and stay there for a long time till, better results or better corporate governance or something starts to change. But this is an environment where all of these issues will be taken very seriously and stocks will basically go to the cleaners. So there's no question of buying. Just wait for it to end the fall, and maybe at some point once it goes flat, you can look at buying.
Okay, just a quick word. You mentioned Lupin, Ashwani, but I wanted to ask you about other pharma stocks, especially from the broader markets, the Granules of the world, the Natcos. Do you like anything from that space? Reason I ask is that it's been much more volatile for them.
See, a pullback rally on Granules can easily get to 104, 105. And between the two, maybe, Natco is a bit better company. Even Jubilant Life, those sort of companies can work out. But right now, even the large stocks are moving up. So I think the first round basically belongs to the large caps. So you'll be much better off trying to stick with the large caps. The time for mid caps will come, probably not now, but maybe later on.
Ashwani, okay, Abhishek is with us on Shriram, and we'll go to him in just a bit. Ashwani, just one last name, Kiri Dyes. We spoke with the management yesterday. If you look at the daily chart, it's now taking out the January 2018 highs. It's crossing that level. Any thoughts here?
This is Kiri Industries, right?
Kiri Industries, yes. Sorry, Industries now.
See, anything that is at 52-week highs right now possibly has a good reason of being there. So if we can stay past the 650 zone, it's come off a bit. I think you could have easily another 200 points on the upside. And that's where, you need to figure out what stocks are, not coming off in this correction and stay with them for, capital protection and probably gains as well.
Okay, all right, Ashwani, we're going to let you go on that note. Thanks very much for joining in. Well, really, the stock of today has to be Shriram Transport. And now Abhishek is picking up from his sources that apparently there will be no financial impact of this particular SVL loan issue which has taken place. And in fact, it dates back to some time ago. Abhishek joins in with all of the details and what he's picking up at this point. Abhishek, over to you.
Well, Ekta, what we understand from our sources is that this SVL matter actually dates back to 2013-14. So then a term loan which was converted into a debt with corporate guarantee backed by Shriram Transport way back in 2015. So that was for a period of 4 years ending in June 2019. So Shriram Group will honor this payment as and when it is due by way of raising capital or other methodology, etc. There will be no financial implication on Shriram Transport finance book whatsoever from this analyst feedback that we got in the morning. And STFC, that is Shriram Transport, is likely to issue a clarification with respect to the same soon to the exchanges. When we wrote to the management has declined to make any comment on our story. Back to you.
Abhishek, this is more in the nature of an opinion which is coming in, right? I mean, what you're picking up. Because the information which was disclosed in the annual report is out there. I mean, that is indisputable. So, this is more in the nature of an opinion that there will be no impact, etc. Just to be clear.
No, the implication will not be on Shriram Transport because the Shriram Group will honor the payment as and when it matures or it comes for redeem.
Okay, so you're saying that Shriram Group will honor the payment, but there'll be no direct impact on Shriram Transport.
Correct.
Okay.
Which company, right. Abhishek, are you able to pick up who will honor this? Because you said it's up for due, repayment in June 2019, you said, right?
That is for the tenure of the NCD. The NCD will mature in June 2019 or before that, if at all, lenders decide to, get a redeem on the said matter, then Shriram Group will honor the payments.
Okay. There were clarifications which were provided by the management also on, when they joined us earlier in the morning that there will be no provision which will be required from Shriram Transport. Abhishek, thanks very much for that. So hopefully maybe that should assuage concerns. But I think the street is just not convinced about any sort of clarification coming in from the management, from any other source with regards to who's going to honor the payment eventually. That stock is still down around 15% at this point in time. So let's see, maybe it's recovered a tad bit. It had gone down sub 1100 rupees. So let's see where it eventually settles, but still weak for Shriram Transport. Take a break. But up next, we're going to be discussing market fundamentals. G. Chokalingam will be joining in.
13 points now. So there is a bit of a pickup which you'll be able to see on the intraday chart on Nifty. We had a 5-point change up or down. It was pretty flat, and now things seems to be moving just a little bit. The Nifty will come up and it'll show you what I'm talking about. Okay, G. Chokalingam is founder and managing director at Equinomics. He's with us to talk about what he's making of the markets. I mean, he's going to put out three ideas which he thinks you should pay attention to. 3 stock ideas, that is. Before we get to what you like, Choka, your thoughts on the fiasco with Shriram Transport and the way the stock has fallen. What is your understanding and how would you read it?
Yeah, it's a bad market. So any bad news is getting punished very badly. And I looked at it, the per share basis, the amount involved is around 38-39 rupees, whereas the stock is down, 15%. And after this, now the price to book value is just 1.2. I think the market has punished more than what it deserves. I am sure it should stabilize at this level, and perhaps it can improve once the final clarity emerges for the analyst.
Okay, all right, so that's on Shriram Transport. Chokalingam, you have a couple of picks. So let's start with Siant. You're looking at that?
Yeah, as I've been saying, the whole 2018 would be a year of investments. I find it very difficult to make money in the stock market for this current calendar year. and I believe that the rupee would be under stress, the whole market would be under stress. So that is why I picked up Cyient IT stock, and it is down by 16% from the peak, and also in terms of PE valuation as compared to stocks like Mindtree, Emphasis, it trades at a substantial discount at around 17 PE on 1 year forward earning. Other IT stocks which I mentioned, they trade at 20 to 24 times. So this would be one of the safest IT stocks for the retail investors. So that's why I recommended Cyient.
Okay, fair enough. There's another name is Jai Bharat Maruti, Choga.
Yeah. Yeah, this stock is down close to 50% from the peak. It went to 720. Now it's around 410. That itself makes valuation attractive. Why I like this stock is that it's into auto component, joint venture with Maruti Suzuki. Maruti has 29% stake in this company. So therefore, 86% of the revenue coming from Maruti, according to me, would be stable in nature, and that would grow in a significant manner because Maruti is setting up a plant in Gujarat. Side by side, Jai Bharat Maruti is commissioning a 5th manufacturing plant there. And excellent balance sheet. If you look at the latest abstract balance sheet, the fixed assets have gone up by 212 crore, whereas the debt has gone up only by just 31 crore. So mostly financed by internal accruals. And Maruti has given a target of 5 million cars in next 3-4 years. They already reached the target of 2 million this year. So as they achieve that target, along with Jai Bharat Maruti also would do extremely well. So I believe that it will be a multi-bagger in 3-4 years, but in the short term, it can definitely give a decent return.
Have you looked at where it trades on a PE basis? I mean, stock might have fallen 50% as you said, but everything has fallen. So vis-a-vis peers, where is it trading?
Yeah, correct. Yeah, it is trading on projected 2020 EPS at 11 times. And even now it's somewhere around 14 times only, 14-15 times.
Okay.
And there will be a pump up in the earnings because of the new plant.
Okay. Jokilingam, before we let you go, your last pick would be on Cochin Shipyard?
Yeah, I find this one of the best PSU stocks, and it's a thematic play. As I've been saying, in the southern Chinese Ocean and Indian Ocean, there is a lot of monitoring of the water by many countries. So that is why the naval defense is emerging as a thematic play. The company has, posted 32 rupee EPS and 12 rupee dividend, and stock is down phenomenally. And it's cash-rich company. The cash is 57% of the market cap, and a lot of orders on the hand. And they are expanding both shipbuilding segment as well as repairing segment. They are expecting the repairing segment to double the revenue in 3 years, and which gives very high margin. So considering all these facts, I believe it's a phenomenal wealth-creating stock in the medium to long term.
Do you track Bharat Electronics, Choka? I mean, just off the cuff.
Yeah.
I mean, and
I mean, I initiated Bharat Electronics in 90s when it was 64. I've been tracking it. It's a great company. One should hold it. What is happening within the defense, now the focus is on the seawater. That is where a lot of action is happening involving China, India, and joined by US, Japan, Korea, Indonesia, Singapore, Vietnam. So there is a lot of noise in the seawater, and that is where all the countries are competing with each other to go for monitoring of the water. Therefore, I believe there will be a lot of demand for the naval ships as against the demand for defense products manufactured by the Bharat Electronics.
Okay. All right, Jokilingam, we're going to let you go on that note. Thanks very much for joining in and talking to us. So those are a couple of picks coming in from G. Jokilingam. Well, for the markets flat, but a couple of stocks such as Group Finance seem to be bucking the trend, so up around 4% for that one. PNP Housing as well, up 3% at this point. Take a break. Up next, the government is planning some amendments on drug pricing in India. To discuss the impact, we'll speak to Keval Handa, the industry expert. Well, it is a lot of the pharmaceutical stocks which have been buzzing about, but there is some news that we can expect from the government. The government plans to bring about changes in fixing drug prices and several amendments with regards to this. Basically, there are drugs which fall under the essential list of medicines, and those drug prices are controlled by the government, and the government is possibly going to revise that list or come out with a new type of price control in 2018. To talk more about this, we have Mr. Keval Handa joining in. He is the industry expert and a former MD at Pfizer. Mr. Handa, hi, thank you very much for joining in. Well, first wanted to start with the options which are on the table according to you. in terms of what the industry could face from the government this year?
So what I understand is there is a report from the Niti Udyog that they would like to fix prices based upon the prices sold, the products sold to the stockist, sold to the institutions and sold to the hospitals. So this is one of the options they are looking at. The other one, the recent report said that they are bringing all the strengths. They will do away with the strengths. That's the another option they are looking at. So the first option is dramatically quite different from what the existing price control system is for the NLEM. And the second option is something that I have no objection on that, because if a molecule is under price control, then the corollary is all the strength should be under price control, but there should be a mechanism of fixing prices for various strengths.
Okay. But Mr. Handa, in the first one, which I think is linking all of the prices to a WPI index, sort of a new index when it comes to sort of assessing even incremental price hikes, in your sense, how much do you think it will probably impact industry, i.e. how much do you think price hikes would be limited to on account of that?
So there are two elements there. The first one is the basic fixation of prices, going away from the way today the average weighted price has been fixed up on the market price, to a price where you are trying to say now the price will be fixed on what you are selling to an institution or to an hospital or to the government institution. Now, that's a very dangerous thing to do. Because if you look at the product portfolio of any company, only about 20% as such is sold to the institutions. And if you're going to fix a price for 100% based on the 20% price, then the industry is going to suffer a lot. And actually you're going to bleed the industry there. So that option, to my mind, should be weighted very carefully before you actually implement. The other thing is the weighted pharmaceutical index. It's nothing new, but this has been talked about in the last about 20 years back also, that we'll have to have a separate weighted pharma index. Now, what should go into that weighted pharma index is very critical, because every product has its different uniqueness of API, excipients and whatnot. So if you're going to average everything and use a one weighted thing, probably, have no issues if it is very done scientifically and statistically, and then there is a special weightage for price increases. But will that be only for the NLEM, or is it going to be for all the products? And that's a big question mark. If you're going to extend it to all the products, then you're bringing all the products under price control.
Okay. Mr. Handa, what is your sense in terms of, say, the government introducing all of these regulations? I mean, they have a chance where they could probably step back from these regulations, or maybe, ease the national list of essential medicines only in order to encourage growth for a lot of pharmaceutical companies at a time where there are industry headwinds such as, say, pricing pressure in the US, etc. Is that your opinion as well, that maybe this should be an opportunity undertaken by the government in order to help pharmaceutical companies and formulate another way in order to subsidize prices?
I think it's a very good question. I think what is the broader objective of the government? To give larger access. Now, under the Prime Minister Public Protection Plan, where about 5 lakh families will be covered, I think that's where the focus has to be. How you make that workable? What is that platform that we are going to provide it, and how that platform is going to be very robust so that there are no leakages, and how the delivery part of it should be left to the private sectors. As it is, we have seen there have been some murmurs around saying that the prices given by the government are not acceptable. I think you have to first strengthen that process. To me, that is the big ticket item. Rather than tinkering with prices of the pharmaceutical products, it's not going to help anybody. It's going to only make those people who can afford medicines more richer. It's not going to give more access.
Exactly. Okay, a lot of points to contemplate on, Mr. Handa. Thank you very much for joining in, and I'm sure this is a discussion which is probably going to go on for many, many months to come, considering that the government is still to come out with a certain policy with regards to drug prices and how they will be treated in 2018 and onwards. Take a break, but be back with more market perspective. Well, for the mid-cap index, down around 0.2%. If you're talking about specific stocks, Shriram Transport and City Union come up as the top volume generators. That's Shriram Transport, as well as the fact that it's down 15%. So that stock continues to see that kind of pressure, not much in terms of an intraday recovery. Otherwise, it is a couple of other stocks, something like an ICICI Securities, which has lost around 6% this week at current reckoning. So that stock is down around 3% at this point. And even something like a CG Power, which is down around 5% at this point. So just about holding at around 54 rupees. So while the index is absolutely flat and holding at 10,700, the real story is playing out in specific stocks. But that's all the time that we have on Trading Hour. We leave you with some opinion from Manish Santalia of Motilal Oswal AMC on the sectors he likes.
Consumer is here to stay for next not 5-7 years, but decade, 2 decades. It's all about the middle class, which is going to expand in a big way. Both the discretionary and the staple space are going to do quite well. The whole aspect of premiumization, the mass market segment moving into the higher bracket, which warrants higher degree of spending and higher amount of spending for the same amount. So from that point of view, I think consumption has a long way to go.